Hey, Frugally Rich family, quick pop quiz. When I say bond, do you think of 007 or investments? Gotcha thinking, right? By the end of this video, you'll not only decode Warren Buffett's unique perspective on bonds, but also discover why he might just be the ultimate bond villain in the investment world. Ready to embark on a mission with the Oracle of Omaha? Let's dive deep into the world of bonds. Shaken, not stirred. Bonds are an integral part of the investment world. In simple terms, a bond is like an IOU. It is a debt security that corporations and governments use to borrow money from investors. When you buy a bond, you are lending money to the issuer for a specific period of time. In return for your loan, you are paid a fixed rate of interest at regular intervals until the bond matures. Bonds are considered to be a relatively safer investment option compared to stocks because they have a fixed rate of return and a predictable maturity date, which makes it easier to calculate potential returns. Warren Buffett, an American business magnate, investor, and philanthropist, has often shared his investment strategies and his opinion on the importance of bonds in an investor's portfolio. As an experienced and successful investor, his views on investing carry weight and are certainly worth considering. Oh, bond investments, aren't they just the bee's knees for all you cautious investors out there? If you're someone who values security over the potential for high returns, then bonds might just be your cup of tea. Plus, the bond market is like Fort Knox, highly regulated and secure, making it a fair trading environment. If that's not enough to pique your interest, let me tell you that bonds can provide a steady stream of income, perfect for those looking to pad their retirement funds or supplement their current income. But, and it's a big but, you need to do your due diligence and research before investing in anything, even good old bonds. Nonetheless, if you're looking for something with a predictable return and lower volatility than those finicky stocks, bonds could be the crucial balance your portfolio has been lacking. As the great Warren Buffett himself said, diversification is protection against ignorance. It makes little sense if you don't know what you are doing. So don't let ignorance be your investment downfall. Get to know what you're doing and consider adding bonds to your investment repertoire. So you're caught up in the classic dilemma of whether to invest in bonds or stocks, huh? Let me guess, you're a bit of a safe player who likes to stick to stable income streams, but at the same time can't resist the allure of those big potential returns. Don't worry, we've all been there. Here's the thing, bonds are like that comfortable, reliable sweater that you wear on a chilly day. They may not be the flashiest or most exciting option out there, but they get the job done and keep you warm and cozy. Stocks, on the other hand, are like that trendy leather jacket that looks great on you, but can also make you feel a bit on edge with its unpredictable nature. Sure, stocks have the potential to offer higher returns, but they also come with a greater risk of losing your invested capital. It's like playing a game of high-stakes poker, except the deck is stacked against you most of the time. Bonds, on the other hand, may offer a lower rate of return, but they also come with a lower risk of default and provide a stable income stream. At the end of the day, the decision of whether to invest in bonds or stocks depends on your own personal preferences and risk tolerance. If you're a risk-averse investor looking for a cozy investment option with a fixed rate of return, go for bonds. If you're a risk-taker who loves a good adrenaline rush and is comfortable with uncertainty, stocks might just be the thing for you. But before you go all in, remember this. Always do your research and make informed decisions. After all, you wouldn't want to end up with a closet full of trendy jackets that don't fit you, would you? Are you ready for some bond talk, my clever friend? Let's dive deeper into the world of finance and understand what these bonds are all about. Now, there are various types of them, such as government bonds, corporate bonds, and municipal bonds. Each has its unique characteristics, risk profiles, and potential returns. But here's the kicker. Unlike your classic stocks or mutual funds, bonds provide you with a fixed income stream and stability. You know exactly what you're getting into, no surprises there. Plus, with bonds, you get your interest income at regular intervals. Bam! It could be monthly, quarterly, or annually, depending on the bond's terms. It's all about timing, baby. Oh, and here's the real kicker. Bonds represent a debt obligation from the issuer to the investor, making it contractual. Now, that's a commitment that guarantees repayment of the principal amount when it matures, unlike those equity investments where you only hold ownership stakes in the business. Who needs equity when you can have a guaranteed payment plan? Trust me, bonds are the bee's knees when it comes to diversifying your investment portfolio. Bonds, being a fixed income asset, can be an attractive investment option due to several reasons. One of the primary advantages is that they provide a steady source of income. Unlike stocks, which rely on dividends, bonds offer regular interest payments to bondholders. This predictable income stream can be particularly beneficial for individuals seeking a reliable source of cash flow for their investment portfolio. Furthermore, bonds have the potential to deliver a good return on investment. Although the returns may not be as high as those offered by stocks, bonds usually yield higher returns compared to traditional savings accounts or certificates of deposit. Moreover, bonds are often considered less risky than stocks. While investing in stocks involves the possibility of significant price volatility, bonds are generally more stable and have a lower level of risk associated with them. This makes them a popular choice for risk-averse investors or those seeking a more balanced approach to their investment strategy. Overall, the combination of a steady income, potential returns, and lower risk makes bonds an appealing investment choice for many individuals. Warren Buffett, the renowned investor and billionaire, has long been recognized for his unique perspective on bonds. With his vast experience in the financial markets, Buffett sees bonds as a crucial component of any well-diversified investment portfolio. In his view, bonds provide stability and serve as a reliable source of income for investors. Despite their reputation for being less lucrative than stocks, Buffett acknowledges the importance of having a balanced portfolio that includes bonds. He believes that while stocks may offer higher growth potential, bonds act as a safety net during times of market volatility. By incorporating fixed income securities into his investment strategy, Buffett aims to minimize risk and achieve long-term financial success. Emphasizing the significance of patience and a long-term investment horizon, Buffett's philosophy centers around making prudent investment decisions and holding on to quality assets. With his deep understanding of market dynamics, Buffett's take on bonds serves as valuable guidance for investors seeking to create a resilient and profitable portfolio. Oh, Warren Buffett, the financial guru. This guy knows bonds like nobody else. Seriously, his profound knowledge of the financial markets has earned him an outstanding reputation for his insightful views on bonds. He's been in the game for decades, and let me tell you, his experience has shaped his belief that bonds are an absolute must-have in any well-diversified investment portfolio. Now, I know what you're thinking. Bonds might not offer the same excitement and potential returns as stocks do. But Buffett gets it. He understands the importance of bonds in financial planning. He's all about balance. He understands that when the market becomes overly excited, bonds serve as a dependable safety buffer. They shield you from potential downturns in the stock market. Truly insightful. Buffett is all about playing the long game. He's patient with a long-term investment horizon. He doesn't mess around with quick fixes or get-rich-quick schemes. No way. He's all about making thoughtful investment decisions and sticking with quality assets. It's all about that disciplined and patient mindset, my friends. Now, Frugally Rich family, if you aim to craft a robust portfolio that can withstand any turbulence and make your pockets jingle, you have to listen to Buffett. His take on bonds is pure gold. Diversification, stability, and income generation are the name of the game in his book. Incorporate some bonds into your investment strategy, my friends, and you'll be on your way to financial security and success in this ever-changing market. All right, Frugally Rich family, it's challenge time. We've just navigated the thrilling world of bonds with the guidance of our very own bond villain, Warren Buffett. Now I challenge you to reevaluate your portfolio and see if you've got the bonds to make it big. Feeling adventurous? If this video added a spark to your investment journey, show some love. Hit that subscribe button and challenge your friends to join our bond mission. Share this video and let's see who's genuinely ready to diversify with style. Thanks for joining this cinematic investment adventure. Stay invested, stay daring. Frugally Rich, signing off.